Bloomberg Audio Studios. Podcasts, radio, news.
So here's the latest this morning. Tariffs casting doubt on further Fed easing. Bloomberg Economics predicting the levies could add about 0.7% to core inflation. Joining us now to discuss is the former St. Louis Fed President, Jim Bullard. Jim, welcome to the program, sir. So the Fed chair wants to wait to see the policies to be articulated, and I think it's fair to say they have been over the weekend. So, Jim, from your perspective, in your time at the Fed, once they've been articulated, did you just assume that they stay?
Yeah, I mean, this is one salvo in a trade war, and I think there's much more to come in various directions. This is mostly based on the fentanyl issue and the immigration issue, so it does seem like the three countries that are affected could take actions on those dimensions, and this phase would get ended. But obviously, the president campaigned on a trade war, and I think there's far more uncertainty in the future.
How much of a template, Jim, is 2017, 2018 in terms of the inflationary impact of Trump's tariffs to now when there are more goods being tariffed, but also there is a greater degree of inflation already baked into the system?
Yeah, I think the lesson from 2018, 2019 was the GDP effect and blanket tariffs across the board of 25%, which were met by other countries, would have a big impact on GDP. And I think that would dominate everybody's thinking about it. The inflationary impacts, if they're there at all, would be a one-time effect and would be relatively minor. And that's what happened in 2019. The economy slowed down precipitously, and the Fed actually reduced rates, and I advocated for that at that time as the right response.
Back in 2018, 2019, I knew what the Bega would cost me. I knew how much gas was going to be. I had a sense of where prices were. Now, people don't have as much of a sense of where prices are to that same sort of granular degree. Do you think there is that risk that companies have the ability to pass along price increases in a much more direct and consistent way because of how conditioned people are post-pandemic?
Yeah, I mean, tariffs at this level are, you have to think about them a little bit differently. I mean, you go into the bar and there's a bunch of beer for sale, and the Canadian beer costs 3 times as much as all the others. I suppose you're going to buy one of the other ones and maybe not buy the Canadian beer. So I think prohibitive type tariffs just shut down trade altogether. I think for cars as well, maybe it's not a good time to buy a car if it's going to cost $3,000 more, $6,000 more, the kinds of numbers people are tossing around here. They can delay those types of purchases. So there's all the substitution that occurs with tariffs at this level.
Trump is also talking about putting tariffs on the European Union. So can you view this as a one-off increase in price level, or because he's talking about more tariffs, warning other countries that tariffs are coming down the pipeline, do you see this as an ongoing inflation threat?
Yeah, I mean, one way, so first of all, this order is about the national emergency on fentanyl and immigration. But if you just want to argue the economics, let's say with the EU, then I think it's what's the response of the EU going to be? A simple response would be for them to lower their tariff level to the average tariff level of the U.S. That would make a lot of sense. These are both big economies. I don't see why the average tariff level has to be all that different between the two places. And that's something that the president has argued for, and it seems like maybe now is the time to think about that. Why not have the same average tariff level in the two places?
Jim, is there any reason why the Federal Reserve wouldn't just look through any short-term inflation shock? Any reason to believe they'd be nervous about second-order effects in this building?
Yeah, I think, as we've talked about many times, inflation expectations are a critical thing. They have been going up a little bit, 2-year tips up a little bit. So I do think that's a little bit concerning. But as I say, I mean, the lesson from before was that the growth effects are large or can be large, and that would tend to dominate any one-time increase in the price level.
Hey, Jim, appreciate your time, sir. As always, Jim Bullard there, the former St. Louis Fed President.